Hi, it's the Tax Geek with another episode of IRA 101, which is an oversimplified view of individual retirement arrangements. To check out the other episodes, there is a link to a playlist above or in the video description below. Today's IRA 101 is about rollovers. What is a rollover? A rollover is a transfer of funds from one tax-advantaged account to another. It can be from a 401k plan to an IRA, one IRA to another, or a 401k to another 401k. If rollovers are done correctly, there should be neither income tax nor any penalty due on the funds transferred. Even though these rollovers do not result in additional taxable income, they must still be reported on your tax return, with the full amount of the rollover on line 4A and a taxable amount of 0 on line 4B. Notice the word rollover next to line 4. Rollovers come in two types, direct or indirect. Let's look at direct rollovers first, since they are the more straightforward. In a direct rollover, the funds are transferred directly from one plan to another. The funds are never in your hands at any time. If you complete a direct rollover, you will receive a 1099-R form with a distribution code of G and an amount of 0 in box 2A. Indirect rollovers are more complex and have to be executed very carefully to avoid potential taxes and penalties. With an indirect rollover, the funds pass to you first, then it's up to you to deposit the funds into an IRA or other tax-advantaged account, for example, the 401k plan of a new employer. This amount must be placed in the new plan within 60 days of its distribution. If this deadline is passed, the distribution will be treated just like any early or normal distribution. Income tax will be due on the entire distribution, and a 10% penalty will apply if you are under age 59 and a half. The IRS can grant waivers to this requirement under extraordinary, extenuating circumstances. But there's an additional problem most people who attempt indirect rollovers encounter. IRA and 401k distributions usually involve some sort of mandatory income tax withholding. If you deposit only the net amount of the distribution after withholding, only the amount you deposit isn't subject to income tax or penalty. The withholdings themselves would be subject to tax and penalty unless you deposit other funds to replace them. An example should make this clearer. Mary, 45, is dissatisfied with the performance of her current IRA and wishes to roll over the funds to a new IRA with better performance. But she hasn't decided which IRA plan she will transfer her funds to. So she requests a full payout of her IRA balance of $125,000. Since she is under age 59 and a half, her distribution is subject to mandatory 20% federal income tax withholding, which, in this case, comes to $25,000. If she only puts the net $100,000 into her new IRA, she will still be liable for income tax and a 10% penalty on the $25,000 the original IRA plan withheld and remitted to the government. To avoid this, she would have to come up with $25,000 from her own funds to deposit into the new plan. If she does this, when she files her taxes, she would have no liability for tax or penalty, and she would receive the $25,000 in withholding refunded to her, assuming she didn't need it to pay taxes on other income. This is the primary reason most indirect rollovers are very risky. Unless you have the cash on hand to make up the difference between the gross and net amounts of the distribution, you are at risk for tax and penalty on that amount. Rollovers do have limitations. First, you cannot roll over the same funds from one plan to another plan more than once in a 12-month period. However, transfers between investments in the same plan are not subject to this limitation. If you have a Roth IRA or 401k, it can only be rolled over into another Roth account. Transferring funds from a traditional IRA to a Roth IRA is called a conversion, not a rollover. Taxes, but not penalties, are assessed on the amount converted. Conversions will be the subject of a future video. As usual, this video is designed only to provide a quick overview of rollovers. More information and resources can be found in the links in the description. If you found this video informative, please give it a thumbs up and subscribe for more content. Please share this video with anyone who would find it useful. If you have any questions, comments, or suggestions for future videos, please leave them in the comment space below. Thanks for watching, and stay tuned for more of your taxes oversimplified.